Good morning and welcome to today's 10 at 10, which is available for everyone. So earlier this week, we've been covering the various ledgers, and today we're going to look into the cash ledger, which in particular is going to cover items such as petty cash, bank accounts and credit cards. So not just physical cash, also bank accounts and credit cards as well. Now, if you use the double entry accounting system, by which I mean an accrual basis, where you're raising invoices and bills, transactions within this ledger will be paying down existing assets and liabilities whenever they correspond to a sale and a purchase. Remember, you've already accounted for the cost by posting the sale, by posting the purchase, or you've accounted for the sale by posting the sales invoice. So just remember, these have already been accounted for. Now, maintaining our cash ledger is critical to managing our credit control. So we've got to be looking into a cash ledger and making sure that this is all up to date. And of course, remember with your cash ledger, this includes cash and it may include checks, bank transfers, or of course, you may even have some additional items such as payment gateways, say Stripe. Just remember that checks, bank transfers, and even payment gateways may have some timing discrepancies if you're reviewing your records versus, say, one of your customers' records if you ever need to check anything. So just remember there might be some timing delay there. Now, the first thing I will say before starting on our physical cash ledger is check, are your sales ledgers up to date? By which I mean all sales should physically be raised, and likewise, are all of your purchase ledgers up to date as well? Have you posted all of your purchase invoices? Really important, given that your cash ledger is going to connect with these quite heavily, so we want to make sure these are up to date before we look at this. Then, when you physically have a transaction that you're looking to reconcile, do you know exactly which invoices are being paid by a given transaction? Or are you perhaps unsure which invoices are paid by the given transaction? Really important to know the two, because if you're unsure, the posting mechanism is going to be a little bit different to if, of course, you're fully aware of what it relates to. So one thing I will say is when it comes to posting, if you're certain what the transaction relates to, or if you have a remittance from a customer, or if you have some sort of payment receipt from a supplier, then allocations can simply be allocated to their corresponding purchase invoices, sales invoices, etc. Nice and clean, nice and easy. If you're unsure exactly which invoices a payment is due to be allocated to, then there can just be the temptation to do a few things. Either allocate it however the heck you like, or there's temptation just to leave it. And the problem with leaving it is it only really works in the short run because you can't see an up-to-date supplier record, you can't see an up-to-date customer record. So if you ever need to check these, it makes it much trickier. So what I would say is it makes it more difficult to basically review the position you're currently standing in with a supplier or a customer. So you also can't see whether an underpayment has been made or whether an overpayment has been made. So we recommend posting these payments where you're a little bit uncertain as a physical payment on account, by which I mean an unallocated payment which shows on the contact record. Really important, that bit. If it doesn't show on the contact record, it's harder to trace. However, it's essential to reconcile to the correct contact when posting a payment on account. Basically, avoid duplicate contact records. This can often happen, actually, particularly if you use an accounting system. If you're entering in the record and you're allocating to a contact, if you manually key in the contact record, rather than selecting them from the drop-down list, you can easily duplicate a record just by doing a little mistype, missing a letter or adding an extra space. Make sure you use the drop-down function. You want to allocate it to the correct contact record right from the start. Otherwise, it makes it pretty much redundant because you end up with two contact records with no clear pattern and no correlation between the two, which means you have to merge them. Also, whenever you post a payment on account, it should be displaying alongside the same records as the existing invoices. So do check if you already have a duplicated record, do merge the two together. And even if you're unsure on the physical invoice allocation, we can decide that later. We can allocate these at a later date when we have, say, more information, or when a more specific payment has been made. Now, what I mean by that is if you're paying down a supplier in arrears, you might be paying them down in installments of, say, £1,000 a month. Nice and simple, helps with your cash flow. But if you were to suddenly pay a specified amount one month of, say, £780 and 24 pence, Really, really, really specific here, and it's a change from the norm. Usually what you find at this point is the sum of the payments before this and the sum of this payment are likely to match precise sets of invoices. So this is usually a good close down point where you go, right, I want to see a supplier statement. I want to check which invoices I have, which invoices I don't have, and I'm missing credit notes. And then it gives you a much clearer indication of what you're allocating to. Then it's simply a case of start with your oldest payment, allocate to oldest first, and work your way forward. Until then, until you have absolute clarity of exactly how to allocate the payments, at least, even if you haven't allocated them, the due balance on the record should be accurate. And of course, most importantly, you can still issue customer statements. So any query on customer payments, still post them as a payment account, because you can then chase the customer for payment. Otherwise, it's essentially the statement's going to be nonsense. They're not going to be sure of what it is. But what I will say is when you post a payment reference, just use the word payment or something really clear so the customer knows that when they look at it on their activity statement, it's not a credit note and they don't get confused between the two. Now, the one thing I will say is so far, cash should be pretty straightforward as far as do you know what it's for, do you not, etc. But there are some common errors we do see in the cash ledger. Now, the first one, and probably the one that's the most prolific, is simply using an accounting system. You've imported statements or whatnot, or you have a bank feed, but you don't actually check whether the statement balance matches what is showing on, say, your bank account or your credit card statement. And the real difficulty with this is if you don't check, you could be missing items, you could be duplicating items. So the first thing to check before going anywhere else in your cash ledger is make sure that your statement balance is correct. Make sure it matches. I'm not saying you necessarily have to check this daily, but I would check it at least monthly, and depending on how many volumes of transactions you get, you might need to check this more often. But I say monthly or quarterly is fine. Generally, once you're up to date once, it's harder to get out of sync going forward. Another error is simply leaving the transaction unallocated within our bank reconciliations. So we've imported our transactions, we've got an item here, and we're not entirely sure what it's for, so we just leave it. Now, this often leads to a delayed or a misinformed relay of information to our credit control. So basically makes it harder for us to chase our customers if we haven't allocated the payment, because all of a sudden, if we issue statements, they're not going to be correct. If we start calling, they might have already allocated a payment to a certain invoice. It just mismatches the information. So really important to not just leave it, especially for customers. Now, another one is simply allocating the payment however you see fit. Does happen. Sometimes it's one of these ways of just clearing it from the bank reconciliation. Oh, don't need to think about that anymore. Actually, what you find is this causes more of a problem later on, because if the payment has been misallocated, usually you find that the next payment's misallocated and the payment after that. And then what you find is when you eventually come to a situation where you've got a bit of confusion, it can prove difficult to unwind. So I wouldn't just allocate it if you're not sure. I'd only allocate if you're absolutely certain, or this is just a no-brainer. But if you're not certain, don't just allocate it. However, it can make a headache for you later on. Now, if you do post a payment on account because you're unsure of how a transaction is physically allocated, next problem we encounter is when you forget to pursue the additional information or missing items. So you're not sure what it's for, but you just don't chase for it. You don't find anything else. So when it's out of sight in the bank recs, it sometimes falls out of sight. Out of mind kind of concept. Don't forget, it's definitely not out of mind. It shouldn't be out of mind. It will be in your contact records. You should be reviewing these contact records if you're using payments on account. So check your age payables, check your age receivables. Make sure you're actually physically chasing the remittance advices. Make sure you're chasing missing invoices, missing credit notes. Don't just forget about it. If you are posting payments on account, it's another action. Make sure you follow it up. And then finally, really common error, but only for those of you who are VAT registered and on a cash basis scheme. So obviously we've mentioned about posting payments on account and leaving them until you get more information. The one thing I will say, if you're cash basis on a VAT scheme, is don't forget to allocate the payment when your VAT return is due. The temptation is you don't have the information, you just end up never allocating the payment against the invoice. at all. Now remember, your output VAT and your input VAT fall due when payment has cleared. So if you're filing a VAT return and you have unallocated payments on account, you may need to temporarily allocate your payments, probably told us first, before making your submissions. Now, you can always unallocate these payments afterwards, but it means your VAT return, most importantly, is correct at that point in time. Just obviously make sure to do the same the next time if you still haven't found information. But the reality is 3 months should be more than enough time to clear down these queries and chase any missing invoices or credit notes. So this is a little overview of our cash ledger. Of course, we've covered quite a lot of content here and obviously through the week. So if at any point in time you think, I've got a burning question, feel free to ask us. We are more than happy to answer, of course. And tomorrow we are going to be covering some of the accounting codes which cause a little bit of confusion and often throw people a little bit off ski where they're not quite sure what they mean by them, but they have different accounting treatments. So if you're a member of the BBB Club, please feel free to log in. We have content abundance for you to review. And of course, if you're not a member, please feel free to join us. And if not, just remember, we'll be live at 10 at 10 for 10 at 10, which is available for everyone. And I hope to see you all tomorrow. Thank you very much. Bye.